10 days into 2021, and it seems like it's the time we've all been waiting for. We've been buying Ethereum throughout 2020 from 100 to 500 US dollars, and it looks like it's Christmas. Thanks again for joining me on another video. We're going to dive into Ethereum today. If you're new to the channel, thanks for stopping by. My name is Jason Pizzino. Consider subscribing and liking the video if you find some value from the content. Be sure to hit the bell notification icon as well, as YouTube has its way of shadow banning cryptocurrency content. Now, if you're a returning subscriber, thank you so much for stopping by again. I appreciate the comments that you guys have been leaving on the previous videos. All goes a long way, and I really love hearing from you guys and your successes throughout this cryptocurrency bull market. So let's dive into today's video. I want to cover Ethereum. What is happening now? Are we in an accumulation? Are people selling? If you are not in the market, my thoughts, of course, because this is not financial advice. I am not a financial advisor. And basically for other guys who have been holding, like myself, what I am doing at this point, especially as we see the market begin to heat up. And lastly, I'll cover some of the worst things you can do as an investor. What I've seen over the last 10 years, some of the worst habits people have when it comes to markets, especially in these crazy euphoric times. All right, guys, let's dive across to the charts. If you are looking to purchase any sort of Ethereum or cryptocurrencies, I have the links to these in the description down below for Aussies and internationals, SwiftX, Binance. Be sure to subscribe to those as well. And let's see if we can get this video to 300 likes, and we're nearly at 40,000 subs. So thank you very much for your support, guys. Subscribe, like, let's take a look at Ethereum and what we're going to do from here. First things first, market cap, 1.1 trillion. This was the level that we all thought we'd get to in 2017. We were thinking we were going to crack that $1 trillion to the crypto market. Never made it. Peaked out around 820 billion. Ethereum, 154 billion. Bitcoin, of course, 764 billion. But today's video, we're going to focus heavily on Ethereum and our roadmap moving forward. All right, Ethereum, let's have a look at a few on-chain activity analytics. We can see that the volume is rising here, and it's just staying steady with the transfer count. So overall, we can see the chart pattern here is we had a huge spike during the ICO boom, died off, the volume is down, and now it has been picking up since around middle of last year. So I think that's a great sign. I think we still have more of this to come, plus potentially a hell of a lot more. So that's all to be seen, but we're looking at the trend. I think that's the direction that we're heading in. Next metric we're taking a look at is the ERC20 project. So this is all of the cryptocurrencies that are built on Ethereum. 233 billion out of the total 1.1 trillion. So under 25%, above 20%. Let's call it around 20 to 25% of everything in the cryptocurrency space is on Ethereum. This trend is going up. 50% total market cap over the last 7 days. So that has also increased. Obviously, as Bitcoin's price increases, then that's going to increase the rest of the projects as well. Take that into consideration. But obviously the trend is up, and a hell of a lot of it is on Ethereum. All right, so it's time for the chart. I'm going to start at a macro view and work our way down to a micro on the daily. So we're going to start at the monthly, check out the long-term patterns, because that is what we want to use to keep ourselves sane. So the way I'm looking at this is we see a first range out. Take this, note it down. The first range is from March 2020, low of $90 to the top that we saw in September. So March to September is already a great range. 1, 2, 3, 4, 5, 6 months. So we've got these 6-month patterns playing out from the first range, and this is the most important range. Now, why is the first range so important? Essentially, it is the first move that the market made in this new trend. So the market has shown us that it has a range of $400, as the top is around 490 in September. The low was 90, 490 take 90 is 400. So that is our range that we're going to use moving forward in this market. Now, the time period is 6 months, approximately. As the lows in March, highs in September. So these are going to be two important points that we use moving forward with Ethereum. A 6-month-ish window, and we can use any division of that as well, like our Fibonacci. retracement levels, but most importantly is usually around that 50%. So the other point is the $400, and we can see 400 start to work its way into the market. From the lows to the highs, we're seeing $400-ish ranges. It doesn't have to be directly on that point, but somewhere thereabouts. If we see some price areas that are all culminating in that point, so like price clusters, we're going to use that 400 and just see if that also is an area that is coming out as numbers in the market. So for example, if the low is at around 400, we see it around 310, we're going to use 400 as a range from that 310 and move it up to around 710. And we did see some minor halting at 700, but of course this market is so strong that it is blowing through a lot of these right now. But overall, that's just another tool for the toolbox. It's not a be-all and end-all tool, but it needs to be considered, and I use it as part of the toolbox. Next thing I'm doing is throwing the chart onto logarithmic chart so that we can see all of the price points from earlier in Ethereum's history, which was December 2016. Now I'm going to throw on all of my tools that I have just added to the chart, so it's going to be messy. There we go. We can see all of that there. So what I want to do is work into the first bull market that Ethereum went through from late 2016 into early 2018. So essentially around 14 months. Now I'm just going to use these numbers moving forward so that we remember what has happened in the past. And if we see it happening again, then we can say, well, this is history. History rhymes, doesn't always repeat exactly, but we're not going to be thrown off if it throws us a curveball. What I'm talking about here is dropping down to the next time frame, so on a week, and the first run out of the lows was 27 weeks. That's basically half a year. The move up was 7,100%. Do I think we're going to see that again from the low of $90? No, that's going to put us well and truly up there, probably towards the end of Ethereum's bull market. That's what I'm thinking at this point, but we're going to track that along the way as well. The big thing I want to have a look at here is the retracement. So basically the corrections after the major rallies. And the first correction we could see came in March, and we could call it 2, maybe 3 weeks, basically because the stopping volume came in on the week of the 13th of March, and it didn't go any higher until we saw this initial breakout. But we had 1, 2, 3 weeks before we got into the low. Essentially 2 weeks, because the week before that, the market was still moving up. So that little range was around 20%, 24%. So if we saw a 24%, no big deal. The show isn't over yet, it's just a correction. Now, that can obviously be wrong as well. We could see 24% and the show could be over. I think that's highly unlikely because of what we see next. Following that, we had 27 weeks total moving up from that point, from the low, but from the correction low, it was 10 weeks. So that's 10 bars, 10 weeks. So almost 3 months, say 2.5 months from that correction point. So what we can gather from this first range of Ethereum's is that it had a longer run from the bottom to its first range, which was 14 bars. Then we had about 3 bars, 3 weeks of a correction. And then we saw another 10 weeks after that. So the first range out of the low was the longest. Then we had a few weeks. Then we had another 10 weeks. So that's what I'm looking at moving forward. If we get a correction, whenever we get that correction, then I'm going to measure that range and just see how much time that took, move that across to the next correction low, and then going forward, it gives us a roadmap of how far we could expect the first move of Ethereum to last. Following that point on Ethereum, we saw the top, and then from there, we had a 70% correction. Now, I'm not including this bar here where it dumped to $13. I think something crazy was going on with Coinbase, so I'm not including that data all the way down here. It was like a fat finger day. People got wiped out, even though it should not have happened. But we're going to use the what I'm calling the correct low. This was a low that happened on more exchanges. Not all exchanges hit $13. So from this point, we got to a low of 130 from a high of 420. That gives us a 70% correction. Now, in most cases, you would consider the market done and dusted if you saw a 70% correction. We have seen this in the past on Ethereum. However, as Ethereum grows, as it turns into a more mature market, I wouldn't expect to see 70% corrections during the course of a bull market. That's what I've seen in the past, so I'm not going to count it out, but I think the probabilities become less and less as the market matures. Following on from the 70%, we saw 7 weeks up, 2 weeks down, 5 weeks up, 2 weeks down. So the corrections were quite short. They were 50% of the first correction, and moving up in prices was 200%, then 70%. Essentially, we were getting a bit of a wedge pattern forming with higher lows. So the emphasis and the bias was towards the bullish side before we saw the final breakout, which was 11 weeks at 415% from the low previous to the breakout. So the low within that triangle pattern, 400%. I'm not too concerned about are we going to do a 400% out of the low. The main thing from this point is the timing, because this is what we need moving forward to understand what may or may not happen. What sort of time frames does Ethereum like to work in? So now that we've covered those metrics, I'm going to clear those off the chart so we've got something cleaner. Moving average, something that we keep on there just for the bullish momentum, the bullish market. Will we come back to the 20? Most likely, but at what point? No one knows. It could run on like we saw in 2017 and take some time to come back to it. And that was the 70% correction to come back and touch the 20-week moving average. It was just not anywhere near the 20-week for the entire course of that initial stage of its bull market, from $6 to $420. So again, in this first range, going back to our price range of the first range out of 2020, was $400. What we saw in Ethereum was $414 in this market, in this first massive range out of 2016 to 2017. So these $400 levels continue to repeat for Ethereum. So that's definitely an important number to me, and that's something that I'm going to be using moving forward, along with our Fibonacci price projections, to give us a roadmap to let us know maybe these points are going to be important to maybe start taking some of our profits out. That's what I use them for, and that's what they're there for. That's what they've been created for. Now, moving along, I'm looking at 2019 and 2020 as being the accumulation. We can see that now in hindsight, so much easier. 2019, 2020 was the accumulation. Buying at these levels between $80 and $500, let's say $450, we now can see that if you're at the $100, we're at $1,300 now, you got your 12, 13, 14x, depending on where you bought. Some people may be taking profits, which means we may see some slight resistance. But overall, the amount of buying that was going on here that we can see from the volume, to me, speaks that we will be going a lot higher. I don't think the market is basically buying at these levels to be selling at these tops. I could be wrong, but history shows that we have pushed really strongly above these highs. I just like to play it cautiously as well. I'm not out here trying to bring hopium and a lot of bullish nonsense. I just want to play it with the data that I'm seeing, because I know at the end of these markets, stuff gets super crazy, and price calls of $50,000 Ethereums, $87,000 Ethereums, all this sort of nonsense that people will throw out there starts to play in our own psyche, and we lose track of what's actually going on the chart, which is the only truth at that point in time. So the next question people have is it too late to buy? And I spent so much time going through that first quarter of 2017 to show when the next time to buy is. The next safe time, in my opinion, of course, this is not a trade alert or financial advice. This is just the way I've read markets over the years. Now, buying it as it starts to pump through these levels, like we see back in 2017, we could be buying it at the tops here, and then we get the 70% correction. But I think we are more in this stage here, and we may only see a 20 or 30% correction. So whenever this time comes that the market just pulls up, the next week and the following week, 1, 2, 3 weeks, the market fails to go higher than that massive pump week. So the volume, the week that was just euphoric, which maybe this week, maybe next week coming, we don't know yet. When we see this, I think that is the time to buy. And from history, like I've shown here, we only received a 28% correction from the absolute top to the bottom. So you're not going to probably get in at that 30%, you may, but that's the signal that I'll be looking for moving forward as a safe entry point from here. Right now, we are just heading straight up. So there's no sort of pullback or correction. On the flip side, sure, this thing could burst up to $1,800, $2,000, and this would have been a fantastic time to get in. We don't know. So there's always two sides to every play. Should you buy in at this point, then just remember what's happened in the past, and there have been 30 to 70% corrections at the start of the massive bull market. So if you can stomach that and stomach a 30 to 70% fall from this point, then you're not going to be worried when you see it fall to $900 or 70%, which I highly doubt. 70% brings us down to around that $400 level. So I don't think that's going to happen. I think that would really throw the entire bull market out. So I do think there's probably a lot more upside potential before we see that pullback or the correction. So with that in mind, what to do from here? Probably small positions, dollar cost average until there is a correction, because that is basically a reset point, and that lets you know, all right, we got 2, 4, who knows, 7 weeks until we start to see the market pick up pace again. And that's the time that we want to be buying. So for the hodlers now, the guys who have been buying in with us from $90 through to $500, what do we do from here? Are we taking profits? If some people want to take profits, I wouldn't think that's a bad idea. Again, not financial advice. This is just education from what I've seen in the markets. There's nothing wrong with taking profits if you've made your 2x, 5x, 10x from the lows. You're not going to go broke taking profits. And it allows you to build up your US dollar bag. Again, maybe you're selling into USD, maybe you're selling into Bitcoin, whatever it is. But now you've got a bag on the side to go out and do something else with and try and make some other returns. Maybe when we do see a dip in Bitcoin or some other coin that you like the look of, now you've got some ammo to hit that with. So it's probably not a bad thing if you have got yourself a huge position down the bottom and now you can get yourself 10x. On the other hand, personally, I think this has got a long way to go, and I'm not concerned with a 30% diff. I'm not going to be thinking, oh, what if I sold at 1,300 and I could buy back at 900? I honestly don't care about that. There's more things that I could be doing with my time than trying to trade these 20 or 30%, knowing that the markets can run 500%, 1,000% very quickly. So 20 to 30% almost becomes irrelevant at this point. Now for the worst thing you can do as a trader or investor or someone trying to get into the financial space. If this is the first time you've come to the markets and you are seeing it at this point, at these highs, wishing you'd bought in at $400 or $500, maybe you dip your toes in at $1,300 or $1,400 for an Ethereum and the market goes against you, 30, 40, 50%. You say, screw it, I'm selling out, I'm scared, I'm gone. That is the worst thing. It might sound like a cop-out, but the worst thing is to leave the markets if you want to be a long-term investor. If you want to make money in the markets long-term, you have to ride with it. You have to follow through with the market psychology. And the only way you're going to do that is by watching the markets daily or weekly, having a set schedule to come back to it and learn from the markets. A lot of people probably think that's some sort of nonsense crap, but honestly, that's the easiest, the most inexpensive way to learn about a market, is to be with it constantly and start to get the feel for how it moves. You cannot buy that. And a lot of people, like we can see at this time, and I'm putting it at the end of the video because I doubt there's going to be a hell of a lot of people that watch it to this point, is that is the only way to learn about a market, is to be with the market. Just like night follows day, as this market corrects and falls, people will leave the crypto space for a period of time. They'll come back again when the market gets hot and crazy. And that's, again, the worst time. You wish you were in the market when it was boring and quiet. Stick with it when it's boring and quiet. And when it gets boring and quiet, that's when you get excited, get super excited that no one else is looking at it. Because essentially that's where you want to be. You want to be finding those coins that no one else is looking at. And that time will come again for these cryptocurrencies. Maybe it's next week, maybe it's in 10 weeks time, but that time always comes just as night follows day. It's just part of the cycle. Last thing I want to leave you with is a price prediction and how I'm finding that. I like to keep things super simple because I don't want to be worried about where it's going, what's going on, how to make something overly complicated, have all these calculations. Just simple. And all I'm using is Fibonacci extension and Fibonacci retracement tool. And so the extension here is from the all-time low that's on the Coinbase chart, $6, up to the high of 1420. And then I'm also using the first range out, which I've said earlier in the video is the most important part. And so all I'm looking for here are price clusters, and price clusters just show up on the side here with multiple lines. It looks super messy, I get that. And then we're also going to add in the $400 to give us another price cluster. So far we know 14 to 1500 is a price cluster. That's no surprises. It's the old all-time high, and it's also the 3 times the level of the first range out. So the first range out was that $400 through here. We're looking at a monthly chart from the March low to the September high, projected off the September low, which comes in at $300. So 3 times on the 300, which is the 400 range, 300 plus 400 plus 400 plus 400. That gives us our levels further up here, which is 300%. That gives us the $1,500 mark. Moving on from that, because I think we're going to blow through that in no time, the next ranges I'm looking at are the 4 times, so that's 1900, the 5 times, which is not in here, but we've got around about this area here was around 22 last I looked at it. And then we also have the 2x on the first range of the all-time high. So that comes in at 2800. So really my 2 levels that I'm looking at are 1900 here, approximately that 2200, and then 2800. Now we don't need to be directly onto those. They're just levels that we're looking for resistance and then seeing how the market reacts to that. That's it. It doesn't need to be the end level that we get out, we sell out of everything, because we're actually looking for another pattern to form before we sell out. And I've talked about in previous videos where we're looking at a 1-day swing chart as well, and we start to work our way down the time frames. So with that said, that's the short-term to medium-term price prediction. This could come out next week, it could come out in this quarter or 6 months from now, but they're the prices there. Obviously we've got to break through the 1500, then the 18, then I'm looking at 22, and then of course 28 that far up. So if you found some value from that video, let us know down below, hit the like button. I've also got here SwiftX. If you are in Australia, you can purchase Ethereum and other cryptocurrencies on SwiftX. I'll have a link to this in the description down below. If you're international, I've also got a link there for Binance International, and you guys will probably need Binance US if you're from the US. So super easy platform to use. At the moment, Aussie dollar to Ethereum, 1700. That'll be funny to see in a few hours time, see where we're at. So I'll leave you guys there. It's been a long video, but I'll refer back to this video as our education around the technical analysis and the update as well, especially as Ethereum is getting closer to that $1,400. We're just seeing $1,300 today. I thought I'd make a longer video and just explain some of the background of the price analysis that I will use going forward, and so I don't have to dive into it in so much detail in future videos. We can just refer back to this one. Thanks again for joining me. If you've stuck around this long, let me know in the comments down below. I really appreciate your support. Like the video, share it with a friend that you think needs to learn something about cryptocurrency. Bell notification icon, get us to 40,000. I'd love to see it there, and I'll see you guys at the next video. Until then, have more fun to get more done.